Has the US dollar finally found solid footing? In the early European trading hours on Wednesday, the dollar seemed to stabilize, keeping its position near a 3-week low. This shift follows the initial testimony of Federal Reserve Chair Jerome Powell on Capitol Hill, a spectacle that has captured the keen interest of market participants worldwide. Meanwhile, the euro steadied itself amidst a swirl of political uncertainty in Europe. In the early morning hours of Eastern Time, the dollar index, an indicator that compares the greenback to a basket of 6 other currencies, took a slight dip to 104.770. This level is a hair's breadth above Monday's near 1-month low, signaling a period of cautious trading. The dollar danced within a narrow range following Powell's first testimony before Congress. His words highlighted the cooling labor market as crucial when deciding the timing of interest rate cuts. Powell underscored that a rate cut would only be in the cards once the Fed has greater confidence that inflation is marching towards the 2% target. Despite laying the groundwork for a potential interest rate cut come September, Powell echoed the need for more data to validate any monetary easing. Analysts at ING pointed out that Powell's statements underlined the necessity for more data to back any decisions on monetary policy adjustments. This prudent approach seeks to keep market reactions muted as some economic indicators start to show positive trends. Meanwhile, the euro experienced a slight uptick, trading at 1.0819 against the dollar. This comes in the wake of the second round of the French parliamentary elections that saw a surprise win for the leftist alliance. This unexpected outcome, coupled with the National Rally's victory in the first round, has stirred concerns about a potential hung parliament in France. The challenge of assembling a coalition government in France could extend political uncertainty. Analysts at ING voiced concerns that prolonged gridlock could rattle the bond market, as technocratic solutions, although preferred, may take weeks to materialize. Bank of America analysts have drawn attention to the rarity of the EUR-USD exchange rate reaching parity. Historically, such an event is short-lived, except during extraordinary circumstances like the dot-com bubble burst. The future trajectory of the EUR-USD will hinge on a delicate balance of factors, including unsustainable debt levels, perceived U.S. economic superiority, and Europe's efforts to navigate geopolitical and energy-related challenges. They also caution about additional pressures from potential trade wars following the U.S. elections. However, they maintain that a drop to parity would only occur in extreme scenarios and would not be expected to last long. Across the pond, the British pound traded 0.1% higher at 1.2801, hovering near its recent high of 1.2845, achieved on June 12th. This movement follows the recent general election, injecting another layer of political dynamics into the currency market. Over in Asia, the yen softened, with US JPY trading 0.2% higher at 161.56, nearing recent 38-year highs. Japanese producer price index inflation data revealed a modest increase in factory inflation for June. However, the overall inflation remained relatively weak, casting doubt on whether the Bank of Japan will continue its tightening policy. In summary, the US dollar seems to be stabilizing, the euro steadies amidst political uncertainty, and the yen weakens despite modest inflation increase. The currency market continues to ebb and flow, influenced by global political events and economic indicators. It's a complex tapestry that continues to evolve, and we'll be here to unravel it.